Hey guys, today is February the 20th of 2018, and I want to go over URA, Uranium Sector ETF, using double D Gann's price and time technical analysis. So please pause the video and read the video disclaimer. So, as you guys know, my system of analyzing the uranium sector is always to start looking at the futures market. And you can see that. And I mean, if I close this all the way, you can see that we just been in a downtrend in the futures with with the URA, with everything else. But for some interesting reason, we have been bottoming here. Let's see, 2016. If you look at URA, it really kind of bottomed here, and it just kind of been going since January the 20th. It's just been going sideways. But the futures kind of bottom a little later, November 9th or somewhere around there, 2016 in November. And this is when I'm just kind of focusing because this is kind of like the sideways action. This is where the accumulation and distribution is happening. They're just going back and forth, back and forth. And you can see we got 1, 2, 3, 4, 5. A, B, C correction, chop. So you got 1, 2, 3, but it got, void because it didn't make a higher high. So now it's like, and that's the problem I think with the Elliott wave thing. But, I still have it in the back of my mind. But you see that we've kind of climbed up here. If this was the third leg, it would have just blew this top right here, but it didn't. It just peaked a little bit and pulled back down. So we're just kind of going back and forth. And we've been here for a while. So we're just stuck at this level. It doesn't want to push lower, but it doesn't want to go higher. So it's just stagnant. Nothing really to talk about. The bears have an edge. It's below the, I think that's the 100 and the 50. This is the line in the sand. And it's not looking good. And the more we stay here, the 50 will probably cross into the 100, and maybe we could push lower. So that's on the futures. Let's look at URA. Look at that. Look at the dollar squeezing everybody else. I wonder how the ES is doing. 34%. It's just my analysis says that we're going lower starting from today on. The bears should start getting momentum. Let's actually look at that. Sorry, this is a uranium thing, but I just wanted to see. Well, I guess I can't even get there. I'm using number 2. All right, so back to uranium. I got distracted. So some ask me, why you use the Gann grid? What's the benefit of it? Well, look at the benefit of the Gann grid. And you could use it from different swing points. I just chose to use it from like where it did the all-time low right now, which is that January 20th, 1131. So the first impulse is the important one. From that first impulse, your whole Gann grid shoots out. And you can see right here, the Gann grid ended on 113, somewhere around there. And it shot back down, got above the 45-degree angle, which is that green. And pierced it, support, and shot up all the way to February the 15th high. And then cracked the 45, so the momentum wasn't that great going up or holding, and it just pulled back down. And you can see how price was respecting certain angles. This is the 25% building from now here. So this is your box. And resistance up here, sold off, found support at the 75, failed to climb up that angle, came down, found support exactly, I think it was this 1250, and this is 25%, it was 1249, so it found support right there, and it's having a tough time now over this angle, and you have the 50% here. So this is like your foundation. This is what Gann, talked about. This is what's in his book. This is the stuff you just need to like practice and get at least this down packed and put this. Actually, this technique, I really got this from Michael S. Jenkins. They call it the Gann grid. And, well, I call it the Gann grid. He doesn't call it the Gann grid. I don't know what he calls it. But I call it the Gann grid because you use the first impulse wave. So this I learned from him. So there's other things I learned from other people. But what it pretty much is using is just geometry of angles and the speed and where it's at within a grid, a box. So you can see that we're back to the range. And this is your range 16 all the way to 1131 or 1168, November 9th low of 2016. If you go to the other Gann grid, let's see, I messed this up over here. Oh, that's the ES. Let's see what the ES is doing. So I made my videos yesterday, and I said that starting from today on, ES should go, I expect it to go lower. But you see some bulls are showing up, and they're holding here. I like looking at the 30, and you can see that we're kind of like in this channel here. In the open, look, they try to flush, they try to squeeze the bears, and they couldn't. But it's still early in the game; they probably could still do it, and maybe retest that high of 27.54. But anyway, let's go to URA. And this is my Gann grid starting from the, I got to open this up more, 2 year, from the November 9th low. So the first one was from the January 20th, and this is from where we at now, kind of. And you see, you did the first impulse wave, so then this is my new box. And, you can stick with each other, or you could just, I just like looking at different, because it's all fractal. That's the way I see it in the markets. It's different sections doing different things, kind of all getting together for the big picture. So you see the Gann grid ended right here, and now I have to like create my Gann grid and expand it over here, because now this is the range, which is close to 1131 low of January the 1st of 2016. So we just kind of like, just kind of going sideways. We lost the 50, failed the angle right here, finding support here, or trying to stay here, and failed the 25%, which is at 1360. Let's go to the next chart. Same thing here. This is squaring the chart, or the range. And you can see that what is that? That's the February 15 high. If you had this squaring, you could have realized that we're going to be getting into resistance, so you would not be buying URA around the 15th or in February, especially when it hit that angle, because look, it's respecting that angle. You see? So that's an example of squaring the range from here. Look. You square that low and you square it, and you see that we're hitting resistance. We couldn't get above, that 1636 on the December the 11th to the 14th. We were having a tough time, and this is a weekly chart. So we're kind of finding support here. We're finding resistance in that angle. So it's not just random angles, just random, shit in the chart. It's all mathematical. It just gets deeper the more you study Gann stuff. So you could use Fibonacci, you could use scoring the range. Right there, you can see it's finding support there, and it's finding resistance right there. So it's going to go somewhere. It's not going to stay here all year. It's going to probably break there, and then you're going to be all right. So it's probably going to go up here, maybe find resistance again. Or it's going to find support here. I'm just showing an example. Let's go back to this one. Let's take this one off. See? See? And that's from that swing low. What's this one I have here? Same thing. Maybe more compressed, as you can see. Let's go over here. This is from the January 20th low, the all-time low in URA. And you can see that we found resistance here. Kind of go back and forth, chopped around, found support, came up, found resistance at that angle, which is the 15. So you see, it all correlates. It's all fractal. You put, obviously you got to have the, like, what they call it. It's kind of like you have to see it in your mind, you know. Pick the low here, square the range, and see where price. What does price do when it hits these angles? Sold off, found support here, popped up, failed. There was nothing there. Interesting, you see, it was just kind of floating in the air. Popped up, it's finding resistance again there, chopping around on that red line, and now it's kind of like here, and you see this big square, this big angle. That's a really strong angle. Let's see if we could get above that. And that square ends on February the 17th of what day is it? Oh, I'm wrong. June 9th of 2018. Right there. So let's see how that goes. Let's see here. Well, that's the way. That's from the all-time high. So that's like a monthly thing. Trend line, let's see what we got here. Prices are compressing, guys. Let me tell you. Prices are compressing. We've had 1 year from 2016 to 2017, just going sideways up to here. And now we're into 2018. And if you do the triangular angle here, you can see that it's going to have to break somewhere. And chances are, my bet that it's going to break up higher, just because of the other cycles that are kicking in. The 10-year already cycle kicked in. The 7-year is going to kick in March. So there's a lot of stuff all kind of clustering. And who knows if someone is just buying and accumulating here. I don't know. That's it for this chart. Let's go to this chart. Cycle-wise, time clusters. So you see that the time cluster here picked this, not that it picked it exactly, the low was here on the 9th, and there was a time cluster on the 13th. I think we're going to continue going lower. I don't know if we just sideways, but my guess, and I'll talk about this later, it could be somewhere around March we put a low. It'll be nice because then everything lines up with the 7-year cycle. Like I said, the 10-year already kicked in I think it was June, July. And the 10-year cycle, the 7-year cycle kicks in March. So it'll be nice that everything lines up here. And I'm leaning more somewhere around March the 13th, 15th. This one says the 13th, so it's kind of lining up with my another analysis, which is the machine learning forecasting that I use. And I talked about this yesterday. So I'm going to show you a little bit about it today. So right here, there's a time cluster. So jog that down. The 13th, you can see nothing. Let's look at the cycles. This is the 100 EMA, so it's below that. That's like the line in my sand, for trending. You can see the cycle came here early, put a low here, but then it just sold off. And then somewhere around the 26th, something should happen. Could be a swing pivot high or a low. And then this one pushes all the way to March the 29th, 30 for a swing low with these cycles. So that remains to be seen. But that's what this indicator is showing. That's just noise. The MACD, interesting about the MACD, every time the MACD, look, like when we sold off from here, from the February 15, and we got a little crossover. We kind of had a little crossover. It was a fake. That first one. Then pulled. Then the second one was the good one, because then you see you got this nice little pop. Same thing here. We pulling down, crossover, fake. Pulling down, second crossover, the real good one, nice little pop. So could it be that on this one, we're coming down, this is the fake crossover, the bull trap, and then shoot down, and everything is lining up for the 13 through the 15, 16 around there for that low? It remains to be seen, but that's how you got to kind of think about this. If you can, that's how I look at it with the indicators. On Balance volume, just kind of, nothing really there. Just kind of sideways. I mean, you could do a trend line and just see how that's going there. Let's see, oscillator. It looks like it's putting a swing pivot low, but too early to call on that. RSI hasn't even kissed the 20. It kissed it here, and it was nice. Got the nice pop. Got a nice pop here, but it was divergent, so that was good. That's it. Stochastics selling off here. It looks like it could be a swing bottom, but I'm leaning more that it's probably gonna be somewhere around here. Volume, very anemic. Look at that, below the average. Very, very anemic. Look at this volume. That's nice. Are we having this here? No. There's no attention going on here. Let's look at our Gann. As you can see, we're in a trend line channel going down. This is Andrew's pitchfork, so this is the battle zone. We're trying to get above this pitchfork to continue pushing higher, and it's having a tough time because it's within this channel, and it looks like it wants to push lower. But at the same token, we want to kind of stay above the pitchfork, because if we don't, then we're screwed. Let's get that here. Looking again. Same thing. Look at that. Resistance right there. That 1393. Having just a tough time. Finding support at this angle. And chopping around here. Last, our fibs. Let's look at our fibs. Our fibs. So right here, there was supposed to be a cycle turning point, which was the 31st. That didn't happen. It pushed even lower. So it kind of just did its own swing pivot low here. And it's shooting up. The next one will be April the 3rd so far. So it's not lining up with my March forecast, which is that 13, 14, 15, but we got to keep an eye on that too. That's pretty out there for April. So I got the 13, 14, 15, and then this one's a dud. Forecasting time cluster says somewhere around the 13 is going to be good. This cycle says a swing could happen between the 23rd to 26th and also the 30th. So this kind of lines up with the fib right here. So that's when you have to just kind of add everything up and do some number crunching and see what's the possibilities of a swing low if this is not the swing low. That's that for that chart. And last, I wanted to show you my, this is a timing solution. This is what I use for machine learning and other stuff I use. But this one is showing a cycle for a bottom swing low on the 15th. So right now it's kind of chopping around, and it's going to maybe do some pops. Maybe this is the swing pop, swing high here, and then it just shoots lower. But whatever it is, this is the forecast, the 15. So you got the 15, you got time cluster saying the 13th, somewhere around there, and then you got the April over here. So somewhere around here, if this is not the swing low, it's going to be somewhere around here. And it could probably be nice, because then we could get in at a nice low. We could get in at the 1183 or that 1168. Oh, damn, we could go all the way, get in from the, the 1131, the January 20 of 2016 low. That'd be nice. It could be a nice flush. The 7-year cycle kicks in. You know, it's all dandy and it looks all nice and pretty. I'm just thinking that it could probably pan out that way, but sometimes it doesn't pan out that way. But that's what I'm thinking. That's what's on my mind. I'll keep you posted on that. And, you know, for those that, you know, can't trade, you know, the URA, you can always look at, you know, the other uranium stocks, UEC, UUUU, URG, LEU, There's some here. I'm watching GE, AMD. I don't know why I have it on the uranium section here, but yeah, you get the picture. You could kind of buy those. The one that I probably, if anything, I would buy would be the URA. Let's see where that's at. I mean, not URA, UEC. Look at where it's at. It made it $2. Wow. And it just kind of sold off. And it just bounced here. So if you get a nice little flush, man, if you get in what's 13, 15, if it could take that out and retest this here or even this low, this would be nice buying opportunities around that time frame. 13, 14, 15. So there goes my clock. I'm going to sign out. Hope you like this video, and I'll let you know what I'm seeing, my thoughts on the uranium sector.